Now we head over to our next startup. We have GreenArc Capital, and they're going to share about a platform that provides alternative lending to populations that lack access to financial services. Hello, GreenArc Capital. Are you ready to go?
Yes, can you hear me?
Okay, your 5 minutes starts now.
Hi, everyone. I'm Ronnie, CEO and co-founder of GreenArc Capital, an impact fintech from Singapore. Our problem statement is how to boost financial inclusion to low-income families through better access to financial services. There are 2 billion people globally who are excluded from the banking system, half of whom are in emerging Asia. This increases poverty and inequality. At the same time, the demand for impact investments, i.e. investments that seek social or environmental return, in addition to financial returns, have been growing exponentially. This is especially true for institutional capital, which is lower cost and higher volume compared to retail capital. And a key component of impact investments is, in fact, financial inclusion. Typical financial inclusion solutions look at the borrower's perspective. But today, let's trace the problem to the source of capital. Here is the base of pyramid lending landscape. At the bottom, we have the low-income borrowers who take small loans. Lending to them are last-mile fintech lenders with relatively small book sizes, funded by expensive retail or private equity capital. On the top, we have institutional lenders with high volume, low-cost debt capital, but are constrained by minimum transaction size due to institutional due diligence costs. If channeled correctly, institutional capital can fill the financing gap for low-income families. So there is a need for a platform that bridges this efficient capital supply to the high-impact demand side. But there are 3 barriers that limit institutional capital from flowing to the base of pyramid. Small loan sizes, challenges around credit risk, lack of credible impact measurement tools. Presenting GreenArc platform, an impact investment platform that connects institutional capital to the base of pyramid by overcoming these 3 barriers with 3 key features. First, loan marketplace. By aggregating loans across Southeast Asian lenders, we are able to provide transactions that meet institutional size. At the same time, investors can create a custom loan portfolio by adjusting the marketplace controls on the top and left to select preferred impact score, interest rate, risk rating, etc. GreenArc is the only platform today that combines loan aggregation, custom loan portfolio creation with an impact lens overlay. Second, institutional credit analytics. By partnering with the Asian Institute of Digital Finance, we are able to provide standardized risk scoring across last mile lenders and hence provide comparable credit ratings, something that has never been done for this asset class. Moreover, using ML-based predictive patterns, we are able to increase acceptance rates for beneficiaries and reduce credit risk losses. Third, impact analytics. A key element of financial inclusion involves understanding the benefit of financial access to the livelihoods of borrowers. We provide loan-level granular impact analytics. Next, we layer national statistics to provide contextual benchmarking to track the progress in beneficiaries' livelihood throughout the loan. We have an industry-first ML-based impact audit module in partnership with BNP Paribas to prevent impact washing, and the first impact API on Apex platform, allowing institutional investors to plug in and measure their portfolio's impact. To summarize, GreenArc platform addresses the 3 institutional barriers and hence is able to significantly increase the capital available for low-income families, at the same time reduce their borrowing cost, leading to greater financial inclusion. On GreenArc's progress, beyond the platform build, we've got institutional partnerships, live clients, and the following accolades. A key milestone is the 50 million social impact debt fund launching in a month with a partner family office in Singapore. We've got a team experienced across emerging market credit, impact, and AI. 14 staff and 2 senior advisors across the globe. Happy to take any questions you might have.
Thank you very much for the presentation, GreenArc Capital. And now we head over to the judges for 4 minutes of Q&A. And let's see what the judges are saying. Judges, do we have any questions for GreenArc Capital? Hello, thank you.
Sorry, Yasmin, I think my putting up the hand was for the previous team. So
okay. Judges, just to remind you, once you put your hand up, make sure that you put the hand down as well so that it can go up again later on. Let's check in with the judges once again. And who do we have to ask questions for GreenArc Capital? We have one from Hugh. Hello, Hugh. Over to you. What will be your question?
Thank you very much. Great presentation. Could you tell us a bit more about the lenders you're trying to engage with? Is this a commercial or non-commercial arrangement? And sort of what's the feedback been from the initial lenders? Thanks.
Sure. So it is very much commercial. So the lenders that are there is a long list of lenders that we all know, P2P lenders in the region. The way we've gone about is looking at the long list and coming up first with a list of 70 lenders, which is really a long list of potential partners. From there, we did deep institutional due diligence on multiple factors, including management team, their loan books, their credit algorithms, and so on, and selected a short list of 14 lenders. Now, these are basically looking at one of the key criteria that we have looked at from the due diligence is are their portfolios impact loans, i.e., if there are payday loans, discretionary consumer loans, etc., they don't qualify. And from a capital perspective, historically, they've been P2P lenders, but the biggest benefit for them is bringing on institutional and especially patient impact capital. Their cost of lending can be brought down.
Thank you for that. Now, our next question comes from Victor. Your question, please, Victor.
Hi, thanks, Ronnie, for the presentation. Just quickly, if you could give me a little bit of detail on how the loans are being sourced, and also how does the data make it to your platform?
Hi, Victor. What was your first question again?
How are the loans being sourced? Like, is it self-selection, or is it agents? Like, how are the loans getting to the platform?
Sure. So on the loans, for the pilot, the way we've gone about is an offline due diligence process. With that, because there are a number of aspects that we wanted to iron out before we make the process online. So currently it is offline, the due diligence itself, but the data, while we have shortlisted the platforms, we've made sure that all of them are FinTech platforms rather than microfinance ones, because they have their own data ready. So from a plugin perspective, API
in production, yeah. Like in production, how would the sourcing work?
Yeah, so the data itself will flow as APIs, and we have the capability to load the data as flat files also. So Victor, just to clarify, there are two parts to it. One is the loans for lending purposes, and the second one is pure impact measurement. So for impact measurement, we have an API which they can access or provide flat files. On the loans front, of course, there is a deeper diligence that is required. We do onboard one platform at a time because management diligence, etc., cannot be done online.
Yeah.
Thank you for that. And we have about a minute and a half left on the clock. I do believe Winnie has a question. Winnie, your question, please.
I thought it was very interesting that you mentioned that the loans were commercial and that it was like a P2P platform. What are some of the lessons that you think you'll be avoiding from the previous P2P experience in China? Thanks.
Yeah. Thanks, Mary. I think some of the P2P experience, I think it is there in Southeast Asia also, the predatory lending. I think that is a key piece for us to avoid. So especially in Indonesia, there is enough history for us to work with. So from a loan selection perspective, as I mentioned, or the platform selection perspective, avoiding platforms which do payday lending or predatory lending, that is quite key. So as I was mentioning previously, the offline element of it is needed for us till we mature or till get enough data to understand how to avoid these predatory practices.
Thank you so much for that. And I do believe that's all the time we have for the Q&A. Thank you, judges, for your questions. Thank you once again, GreenArc Capital, and all the best.